Welcome to the Rapaport market comment. Last week we received some news that reflects fairly badly on the state of the diamond market. Anglo American said it had reduced the carrying value of De Beers by $1.6 billion. That's how much an asset or business unit is worth on the parent company's books. It starts as the amount Anglo American bought the company for. The parent company then reassesses this value each year to align it with the recoverable amount, which is essentially how much it could hypothetically sell the asset or business unit for, minus a few other things like the cost of selling it. When the carrying value exceeds the recoverable amount, the owner has to adjust the carrying value. This is called an impairment. Anglo said that De Beers impairment in this case was $1.6 billion before tax and $1.56 billion after tax and other deductions. It assessed the recoverable amount of De Beers as of December the 31st last year and concluded it was worth $7.6 billion. It therefore reduced the carrying value to this. Most of the impairment, $1.4 billion of it, was related to goodwill, which is essentially the value of the brand and loyal customer base. Why did this happen? Anglo explained it as follows. First, it expects lower diamond prices than it previously anticipated, reflecting a reduction in the forecast levels of consumer demand. This is mostly because of economic uncertainty in the US and China that had impacted the outlook for consumer demand for luxury goods, particularly in the US. Anglo Financial Director John Heasley said in a call with investors last week that Chinese demand has been slow to recover post-COVID-19. Most of De Beers' business involves selling rough diamonds to site holders whose polished diamonds are destined for these key consumer markets. So the strengthening of the US dollar against certain other currencies in consumer markets has harmed demand in dollar terms. One important part of the calculation is Anglo's assumption that lab-grown diamonds will become a product distinct from natural diamonds. It forecasts an imminent bifurcation between the two categories, with only a limited impact on the natural diamond market in the medium to long term. Anglo American's finances have suffered because of De Beers' weak recent performance. Last year, the group's sales fell 13%, while underlying earnings slumped 51%. That's of course not just because of De Beers, but the diamond business is a very important element of the group. Heasley said Anglo doesn't want to rely on a recovery in the diamond market to improve its financial performance. On that note, De Beers CEO Al Cook pointed out a few important details about the miners' inventory last year. Remember that 2023 was a very difficult year for the diamond industry, with De Beers' own rough sales falling around 40%. Its inventory of rough diamonds grew by around $500 million during the year because of the sharp decline in sales in the second half. Notably, the company decided to purchase fewer diamonds than usual in the latter part of the year. We're talking about purchases De Beers' trading business makes from the mining operations, the most important of which are in Botswana. Its inventory now stands at more than $2 billion. However, as Cook pointed out, this would have been more than $2.3 billion had the company not reduced its purchases by $300 million. Looking at this year, De Beers said there were some green shoots of recovery at the January side, where sales were higher than in previous months, but it believes it will take time for demand to return to the levels the company had previously been forecasting. It's also working on cost savings of around $100 million per year. Anglo American is being cautious about diamonds. Do you think it's being too cautious? Let us know in the comments. This video is brought to you by RapNet, the world's largest and most trusted diamond trading network. If you liked it, please subscribe to get every new one we make on a weekly basis, discussing trends and analysis in the diamond industry. Thanks for watching and enjoy the rest of the week.